You could argue that there is a realization by countries and very powerful countries that aren't afraid to stand up to the COMEX. They aren't afraid to stand up to the LBMA or to the West for that matter. They understand what we've been doing and they're beating us at our own game. It will happen. It will happen in a glorious, spectacular fashion. It will test your patience. But when it snaps, it will snap in a way that you finally will understand why you had such strong fingertips, that your intuition led you in the right direction.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials while supplies last. Pre-1965 mixed junk silver is just $1.99 over spot per ounce, and pre-65 half dollars are just $2.25 over spot per ounce. Backdated 1-ounce gold South African Krugerrand are just $49 over spot per ounce. And 10-ounce silver Nordic Mint bars are just $2.10 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're grateful for this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us every week for a weekly market update. Today is no exception. However, we're recording this Tuesday, March 4th for Wednesday, March 5th. Andy, thanks for coming back on Liberty and Finance.
Wonderful to see you, Dunnigan. Thanks for having me, buddy.
We've been getting a lot of inquiries from clients and viewers and subscribers asking about what's going on right now in the world economic and financial system and in the precious metals. There's been quite an interest in the gold run-up recently over the past month or more, and silver's apparent, failed attempt to break through to new highs, but still showing resilience in the face of what seems to be perhaps the beginnings of failing price suppression, according to some of the analysts that we've interviewed. We wanted to get your view on that, and we've got some other questions from viewers that have been submitted. We're going to be getting to those as well. First, wanted to give you a chance to give us your latest thoughts and what you're watching closely in the current monetary and precious metals arena.
Yeah, resilience is a good word, Dunnigan, and it's showing great resilience. You know, most of us have been conditioned to expecting the floor to drop out once it corrects, like we saw a few days ago. And here we are right back pretty darn close to where we were before the correction. Today, gold is at, where are we at today? Let me just double check here. So we got gold up $22 right now to $29.20. Silver up just a little bit, just a tick or two at $31.82. Climbing back to where it was. The resilience is a very good word, but really what to me is very different, again, as we've been talking about now for the better part of a month, is that traders on COMEX are no longer rolling over their contracts. Many of them aren't, and that's really the difference. That's what enables this rehypothecated system to continue, because we don't stand for delivery, so we just keep rolling it over. It's a cash settlement, it's a speculation, or it's a hedge, but standing for delivery was something that never happened. And we started talking about this in 2020. I guess I'd rather be 5 years early than, 5 seconds late. And we were talking about how there was a slow bleed down of inventory and deliveries happening at an accelerated pace, which was really unusual at that point, like an outlier. Well, not so much anymore. In fact, contracts standing for delivery have led to an open interest surge of over 750%. Open interest meaning those that are standing for delivery. I guess to me, this raises the question, why are the traders in the nation states and the central banks suddenly standing for delivery? That should be something people are asking themselves. The folks that are standing for delivery are not something to be dismissed. These are very sophisticated traders. And at the same time, another strange occurrence is that the net long position on COMEX is rising rapidly, while the short position is at its lowest since 2020. So being naked short right now when everyone is standing for delivery is akin to a mud wall in a rainstorm. stupid, to say the least. We talked a lot about the contracts that stood for delivery last month. 15,691 contracts stood for delivery, 78.5 million ounces, second highest in COMEX history. Another 4.6 million ounces of silver was taken for delivery on Friday, this last Friday, bringing the 20-day total to 41.2 million ounces. That's 4 times higher, at least, than any previous year in silver. COMEX delivered 50 million ounces of silver on the first day of March deliveries. But where is the media talking about any of this? Do you hear them? I don't. You and I do, and you know, folks on your channel do. This is monumental. This is the same kind of environment where, you know, why didn't the media tell us gold was reclassified as tier 1? The important things they're not telling us. Since December 2024, over 600 tons or over 20 million ounces have been moved into the vaults in New York City. This is an anomaly for sure. I find it interesting. We've seen 28 million ounces shipped from London since mid-December, yet now they say it's a T+8 week exchange instead of T+1 day, as it's supposed to be. And the question would be, if they were able to send 28 million ounces of gold since December of 2024, why all of a sudden are there delays of manpower and of trucks? It speaks more to me of a default than anything else. And we've talked at length about the massive amount of naked shorting in London, which amounts to 90% of all the trades are paper. And so, you know, you have to wonder, is this targeting the Bank of England? Is this targeting the LBMA? Is it not as germane? Is it not as, you know, a lot of people say, no, none of that stuff is, it's taking advantage of arbitrage. It's bringing gold home because there are people afraid of war in Europe. It's the Trump tariffs. It's, you know, it's the Basel III. Maybe some of that is true, but could it be more? I don't know, but it just, you know, the spidey sense tells me it's something more. But it appears that the London market for the past 2 months has been tapped out of bars, and they're trying to scurry to get more to deliver, or they're pausing because they're afraid that that's what ultimately will happen, kind of like Nixon did when he closed the gold window, figuring they're going to take all the gold, and then what? One thing that I found very interesting is the trend of bullion banks versus non-bullion banks. So the bullion banks being JP and Citi and Bank of America and Goldman. These are the commercial banks that are the major traders in bullion. 17.5 million ounces of silver was transferred from bullion banks to non-bullion banks here just a few days ago, making it one of the largest transfers in COMEX history, but going to sovereign wealth funds, family offices. You know, this could be a proxy for the PBOC. It could be a proxy for Saudi Arabia. We don't know who they are. Proxy for India, a proxy bank, or a proxy sovereign wealth fund, or a big family office that's set up here in North America and standing for delivery over the Globex. These are very unusual things, and people should be paying very close attention that these kind of players don't take 17.5 million ounces of silver just for the hell of it. This is way outside the norm. We've seen the same thing in gold with February contract. Same thing. Massive delivery from bullion banks to non-bullion banks. So who are they? They're the others. That group, the others we talked about. Not really sure who they are, but we know that they're not bullion banks, but they're wealthy and sophisticated as hell. And that lends to conspiracy. Who could it be? Big money, to say the least. I would argue that, you know, some people would say it's Fed proxy bullion banks are probably the biggest buyers. So, you know, even the banks on behalf of the Federal Reserve, and they say proxy so that they're set up in a different way. A family office, a sovereign wealth fund, as I mentioned, some sort of a fund, a hedge fund, doing it on behalf of the Fed, could they, or maybe on behalf of other entities. China, CTA, commodity trading advisors, are following suit. This is continuing to happen. Now, let's talk about, at the same time, what's happening in the marketplace. Kind of caught my attention, and of course, I'll take any questions. These are just things that have caught my attention. The VIX on the stock exchange has moved up, surged above 20 for the 6th straight day. Since February 14th, the VIX is now up 45%. So you're seeing great volatility, not only in the crypto market, but also in the S&P. I find it interesting that hedge fund exposure to the Mag 7 is at a 22-month low. So all of these people that have been driven into the Trump trade, the risk-on trade, the AI trade, the hedge funds, again, the big money, it's at a 22-month low. We've talked about the insider selling, NVIDIA shares selling, Jamie Dimon selling, Bezos selling, Zuckerberg selling, 7-to-1 insider selling versus buying the hedge funds at a 2-year low. And yet all of this money that has ridden this up, what does that tell you for where it could potentially go when the big guys are leaving? And institutional capital is moving from risk on to risk off all of a sudden into gold, out of Bitcoin. Bitcoin, it's interesting. It's almost like a retail trap. They announced the crypto fund, and crypto's gotten killed since the last 2 days since that came out. It's like the old adage, buy the rumor, sell the news. I found it interesting that the Atlanta Fed has revised downward their GDP expectations to negative 2.8%. from 4% a month ago. Trump's going to get blamed for this, but they're saying growth is now going to be negative by almost 3% instead of positive 4%. That's not good. So these are the things that I think, at least from a standpoint of what I see happening, biggest money in the world is standing for delivery and rushing to get gold. London doesn't want to let go of the gold because it's massively rehypothecated. And the markets are massively overvalued. At the same time, every single metric that speaks of recession is screaming, we're here, the uninversion of the yield curve, the record amount of money in money markets, the unemployment numbers going higher, the Claudia Sahm rule, all of these things have been triggered, and yet, I guess the way that they calculate a recession has changed so that we're not really in a recession yet. To me, it seems that we are very much so in a recession. We're seeing massive layoffs. And when you realize that government spending accounts for, 30% of GDP, when you're laying off all of these government employees and trimming the government spending, the fraud that was our GDP, it just seems that we're moving into a very dangerous time. I would call it high probability of stagflation. Inflation ain't going away. It's only getting higher, going higher. And at the same time, the prospect for economic growth, Atlanta Fed is telling you, is negative 2.5%, almost 3%. That's not good. That's stagflation. And that seems to me where we are going. But on another note, it just seems that there's big money is preparing for something that's coming, a massive shift into gold, a massive and silver, and grabbing it, taking possession, getting it out of the harm's way, while the insiders are dumping stocks and the public has rushed into it and into crypto. Is it a trap? Don't know. Kind of looks like it right now, but the world changes so fast. It's hard to tell one day to the next. But I would say that this is not a time to be a speculator, and the insiders, the big money, is telling you that.
A couple of things to emphasize in what you said, that GDP outlook revision downward by a massive amount. It sounds like almost 8%, from plus 4% to minus 3%. Don't know how much of that, you said it may get blamed on Trump. I know that the reduction of the federal workforce that's going to be accompanying a lot of these layoffs and severances and that sort of thing is certainly a unfortunately, and it's never supposed to be a major portion of the economy, but in our distorted and sort of corrupted financial world that we've been living in, it has been a tail wagging the dog. In fact, Alistair McLeod has talked to us about that the government portion of the economy, and Michael Pinto as well, has been absolutely outsized. That it's been a debt fueled and very inefficiently fueled in apparent nominal expansion in GDP, but really real contraction in GDP. Gregory Mannarino talks about that all the time too. The true economy, the real physical economy, shrinking and falling off a cliff.
Yeah, I mean, the government doesn't produce anything. They don't have profit motive. And if you don't have profit motive, you do stupid things because you don't care. Well, let's just buy this and spend that and do this. It's not our money. We don't care about profit. It's the profit motive of the private sector. That is what you talk about when you talk about, free market capitalism, where the market itself is the purest form of integrity and it's just the purest way to see growth and removing excess and waste, which is the opposite of what we've seen just from what Doge has uncovered. But the waste and the fraud is extreme because of the lack of profit motive. When you own a business and your life depends on it, you're very cognizant of what you spend and what you take in your balance sheet, right? It's the opposite with the government, and the mismanagement of it is put us in a very precarious position. I mentioned on your show last time, just so people should understand this. Look, we should all be very thankful that the administration is doing what they're doing, but it doesn't matter what they're doing. There's going to be that moment that we have to deal with at some point. We have $28 trillion in treasury debt comes due in 3 years. In 3 years, if we take in what is expected, and this will be on the high end, that's $15 trillion in tax revenue, $5 trillion a year. And he wants to reduce taxes, so that might even be less, but let's call it $15 trillion. That means you're halfway there to what you owe in coming due bonds, which doesn't take into account to this year, the next year, and the next year in spending, deficit spending. We're $900 billion plus in the hole, and it's just the beginning of March for this year. So mathematically, this has become an issue of math. And maybe this is why you're seeing the biggest money in the world run to gold and silver. Now, I have Natalie Brunell on my show today, and she's pretty much the Bitcoin queen in this country. And I want to ask her tough questions. I respect her. I respect Mark Moss. I've had a lot of conversations with both of them about Bitcoin. I don't know what to feel about it. I don't. I mean, I don't think it is a long-term value play or a long-term store of value. I think it's something that can make you very wealthy and will stick around. But the volatility where it can fall 20 and 30% in just a couple of days is very concerning. And when you take a look at, let's see what it's doing today, I don't know. But since they announced the strategic account, Bitcoin's down $900 today. But over the past, let's see if I can do this into 3 days. Well, I mean, it's straight down over the past few days since they announced it. I don't know what it means. I mean, it just seems like it was a retail trap. All of the ones that they mentioned, XRP, Cardano, or I don't even know the names of them all, but they're all way down since it was announced. And the same thing is true here about the S&P. And you got, the hedge funds at their lowest exposure to the Mag 7 in 22 months, yet everyone you talk to who's in stocks, they're in the Mag 7. What does that really tell us? And yet you hear nothing about gold and silver, but if you're paying attention, you see there is a mad dash for it, a quiet mad dash that no one in the mainstream talks about. And your very well-read, articulate, financially literate friends have no idea. That's the scary thing. You can see that there is a concerted misdirection effort to the public. And sometimes you look at the comments, these guys have been saying this shit forever. Well, okay, we have. But at some point, the logic and the reality of it plays out. It's a high stakes game, no question about it. But I will tell you that in my entire career, Dunnigan, it has never felt like it does right now. Something's brewing with gold and silver, big. And you can see they're fighting it. They're not letting it easily get away from them. But there are forces that are not bullion banks that are challenging the bullion banks, standing for delivery. And these proxies, whoever they are, these sovereign wealth funds, are a formidable foe, to say the least. And I think to be naked short right now is insane. And maybe that's why you see the short position on COMEX the lowest it's been since 2020. And maybe will continue to go lower. And maybe that's part of the reason we're seeing the gold come back. But if you are naked short and you need to deliver and the LBMA says, sorry, 8 weeks, what do? Where do you get the gold? This is how the whole thing can blow up. A lot of people think it won't, that the exchange will do something that they need to do to save themselves. But what if it happens in the LBMA? Are they doing that to save themselves right now? 8 weeks, cooling off? It's supposed to be T+1. How aggravated would you be if you had millions of dollars worth of gold that you were expecting for something, whether it be to cover a position or manufacturing jewelry or whatever it is, and you were told, sorry, it's 2 months minimum before you get it because we don't have enough trucks and enough manpower, which is a joke. So I don't know. It's bigger than what a lot of even the people in this industry who kind of lean to the conservative side, not as stupid as I am to say these things, maybe foolish, but I feel it. That's why I keep saying I don't know how it all plays out, but it doesn't feel just like a normal arbitrage or a normal Trump tariff maneuver or even the Basel III thing. It just seems a lot deeper than that. I guess only time will tell. But, as far as retail, we've seen it begin to pick up. We've seen premiums start to slowly rise, availability start to slowly wane, slowly. Because for the last year, it's been the opposite of that. Premiums have been falling, availability has been increasing. Our inventory was never been so deep, but it's beginning to change. And we've seen some very large orders lately. We sold 11,000 ounces, we and you, of numismatic coins. And I will say to all of the people who took advantage of that, I have never seen a better opportunity. And you look at any of the other retailers out there, those of you that got the 63s and 4s and stuff, you'll see exactly what I mean. The prices are way higher than what you paid. And we sold it in a matter of days. So there are people who are beginning to understand what's happening in a very significant way. But I would argue, and give a name to this podcast, the big money is moving from risk on to risk off. At the same time, the public is deeply entrenched in the risk on trade. That, my friend, is something that I would not want to be part of because, as we've said before, the little man always is the last to learn. The big guys not only know the playbook, the information, but they position themselves way ahead of the trend. And you can see they are leaving these risk on trades right now. When you see the hedge funds at a 22-month low on the Mag 7, what the hell are you sitting in these stocks for with profit? Get out. Profits, and that's not financial advice. That's what I would do. Profit's not a 4-letter word. And at the same time, when you see none of the talking heads talking about gold and silver at all-time highs in gold, and yet the rush globally to accumulate and repatriate, what are you waiting for? I think something big is coming for gold and silver, bigger than ever before. Don't know what it is, don't know what the catalyst is, don't know how it plays out, but what we are seeing here in the periphery is so far removed from anything that I can even begin to tell you I've seen in 35 years that I would bet that we're all surprised how it all plays out somewhere this year, what the final numbers look like, where it ultimately goes, and who the players are that are involved in it. So only time will tell, but I don't say that stuff. Look, I don't say that stuff publicly on your show where a couple 100,000 people will watch it only to look like a fool. It is in my soul. That's what I feel.
Just underscoring, you mentioned tech insiders selling 7-1. Also, this time you didn't mention Buffett selling his banks in large extent and building a record cash reserve, more than he's ever held on the sidelines as far as risk off.
He has more treasuries than the Federal Reserve does. How do you like that? I mean, more than the Fed. So this is a guy who's the value investor, loaded with cash and treasuries. He doesn't see much in the way of value, or is he waiting for something that will enable him to come in and scoop things up on a value basis? And as Blythe Masters said many times, JP Morgan doesn't buy gold for their house account, it's for clients. Okay, well, if that's the case, who's got $4 billion that they delivered in gold to COMEX in February? Who's got that? Could it be Warren Buffett? Maybe. I mean, seems like a good value to me. There's all sorts of supposition who that is, who those clients are, who took that delivery. One of the things that's important to note is that a lot of the metal hasn't left COMEX yet. Some has, a good amount. But when it's delivered into the eligible account, someone like we have one of our Brinks facilities is in New York, JFK. That is a COMEX facility. And all of our clients' metal, gold and silver, is held in what's called eligible category. It means it could be sold on COMEX if you move it to registered. We've seen a massive, massive increase in the registered category, which tells me that there are entities standing for delivery. You don't do that unless someone says, we're going to take, we took the other side of your short contract, JP Morgan, we took the long, we're standing for delivery. So they have to first move it into eligible and then transfer it to registered. And that's what we've seen. But so, something's going on, then again, something's going on. And we have seen a lot of offtake, but the deliveries, as I mentioned, last month, we saw the largest delivery in the history of the COMEX, right? 6 million ounces, 5.9 million ounces of gold, almost 6 million, was taken. The largest delivery ever in the history of the COMEX market for a 1 month contract. Something's going on, and I think people need to pay attention to it.
Yeah, in addition to the other mentions of people going risk off, Soros funds selling banks and amassing cash, and Ray Dalio's cash liquidity at a max time high. And in the face of all that, you mentioned in passing there that you're seeing what had been deep inventories and low premiums, which always is, like you say, looks like the calm before the storm in the retail bullion industry, starting to turn to where the premiums are now creeping up on sometimes a daily basis. Can you explain why that phenomenon happens, where we know that it's happening, and what that can signal to people who've been waiting for a value opportunity?
Yeah, I mean, we were all loaded, especially with since November, the Trump euphoria, people selling and taking advantage of the risk on trade, the NVIDIA, the Bitcoin, et cetera. And then the 2025 allocations, where all the dealers and like, for example, we were able to buy backdate gold eagles for less than the U.S. Mint, or the primary distributors were buying the 2025s and had to buy them. They don't have a choice. They're buying them from the Mint at 3.4% or whatever that number is, and selling backdates at 1.5% less than that a few months ago. So they were loaded with product and having to take on more, and so the premiums fell. They wanted to move it. And then all of a sudden, it's starting to disappear. And maybe part of the reason that's disappearing is that, let's look at silver. Right now, it's at all-time highs against the Canadian dollar, the Aussie dollar, the Japanese yen. And what's interesting, and the bald guy money called my attention to this, is that in 2011, the previous peak, silver barely almost got to 50 per second. The dollar then was at 75. Now it's at 107. So at a 107 right now, it's silver is doing what it's supposed to do as those currencies have fallen against the dollar. And it's at an all-time high. What happens if our U.S. dollar falls back to where it was in 2011, down to 75? You have no idea how high gold and silver will go in that environment. And certainly it could. I mean, inflation is here to stay. And when we get into this recessionary environment, what is the Fed going to do? Are they going to lower rates again and pivot? and re-inject QE again and start to, just say to the world, we're trapped. Holding dollars right now is a losing proposition. And I've mentioned Luke Groman talks about net since 2014. There have been no new treasury purchases net by central banks. On a net basis, they've been selling treasuries to the tune of almost $700 billion while buying $800 or $900 billion, what they account for, a lot more that they don't, in gold, which is the only other tier one asset. So you got a lot of awareness around the country, around the world, not here yet, but because there has been over the past couple of weeks this renewed awareness by the metals crowd, it doesn't take a lot, to blow through inventory. Once you do that, now you're getting into just 2025s. There's no value there. There's no bargain there. I've been screaming to people for forever on your show that this is strange, the premiums and the availability. And I've been through this so many times, done again on lesser, it's never been as extreme. It would be like this, but now it's like this. My whole career, I've seen periods of time where, the mints in general are very inefficient. They're government, right? They don't have the profit motive, but they're the model of inefficiency typically where that would happen, but never with the awareness or the economic backdrop we see right now. So, I've seen this before, and it doesn't take but a day or two of awareness from people, for whatever reason triggers it, where those that large inventory pool that dealers are sitting on, drowning on, losing money on, disappears. And you've been here with me long enough, you've seen it. This is why I tell, like my son who came on board a year ago, I said, listen, when you are selling something as a commission salesman, you're never as good as you think you are when business is great. You're never as bad as you think you are when business is slow. You have to learn that balance, that the market has movements to it that are repetitive. The only difference that I would see this time around is that they're far more accentuated. They're far more extreme, and the rationale is far stronger. And when you put into it the fact that we're now net importers of metal in this country and seeing 20 million ounces of gold that we know of imported here, and a rush to deliver, record delivery numbers, record deposit numbers, and resilience, as you said at the onset, where they knock the price down and it comes right back up. That's been a hallmark of this market for the past several months. They knock it down, where before in my career, they would knock it down and beat the crap out of it and it would never come back. Like in 2011, which began a 5 or 6 year odyssey to the bottom. That ain't the case this time. So it's not going straight up, because there is certainly some pushback by those large institutions who are, fighting an existential threat for their livelihood by being stupid enough to be naked short all these years. But like I've always said on your show, the only way to manipulate a market over an extended period of time is to push it in the direction that it is going. So I always said that those same traders will find a way to flip-flop and screw to the nth degree the people on the other side. Those will be probably some of the American hedge funds who think they're smarter than the market. But I guess we'll see.
Just wanted to underscore one thing you mentioned about, you said there's a scramble not only for gold, but for silver. And from a monetary basis, there's a question from a viewer, it's probably the only one we have time for today, which will be, why is it that when there are analyses of the potential nominal price that gold might reach to cover the quote unquote money supply, the currency supply, that it's typically silver's left out of that discussion. In your view, you've been watching this for a long time. Why is it that silver is so often just completely left out of the discussion of the monetary base and monetary metals covering the currency?
Even though it is a monetary metal, it's a fair question. It's a good question. Even though it's a monetary metal, gold is the monetary metal. Gold is the tier one asset. And you can see by the central bank accumulation of silver that they have not forgotten about it, but it will not back a system. It will not be a bimetallic system, but silver is strategic. And I think silver has not kept pace with gold because silver is a far more important metal to the military-industrial complex and to the people who need it to make high-tech weaponry, is truly the way that I look at it. There's no reason, there's no logical, and you go back to the interview that you did with Ed Steer, and the first chart that he put up, where he showed the largest concentrated short position in any commodity traded on COMEX was held by 8 Western banks. Why would 8 Western banks hold the largest short position in any commodity traded on COMEX? Why would they trade 3.5 times annual global mine supply, these same Western banks, largely on the LBMA, 90% paper short? Why put so much effort into holding down the price of silver is the question that needs to be asked, and then work backwards. It's not profit. There are many other things that they could do that would not be as risky as what they're doing. There is a bigger agenda with silver. So gold is the monetary metal, and silver is too. But silver, its plurality in demand is what sets silver apart from a value proposition. You have monetary demand, you have industrial demand, you have military industrial complex demand. And by now, if we can't tell how powerful these folks are, the pushback for peace is ridiculous. The warmongering, the continuing, they want NATO now. You want NATO to put boots on the ground, the UK and France in the Ukraine. Are you really that stupid? I mean, these folks just want perpetual war. Well, if that's really what you want, and you want to continue to make weaponry, you need cheap silver. And if the world really knew how valuable silver was and how scarce it would be a whole different value proposition. Some of the countries do. India, I would argue, does. And that's why they've imported, I don't really know the number, north of 800, 900 million. And why would they do that if it was just why is China, who's the second largest producer of silver in the world, going around buying Dorian concentrate if they're already producing it there from the miners in Peru and the rest of Latin America, disintermediating the marketplace? Why is Russia adding it? Why is Russia adding it to their strategic stockpile? These are all questions that they don't need to be answered. They need to be asked. And it's easy if you look at that and say, well, geez, what's Occam's razor? Occam's razor say because it's a whole hell of a lot more important than the price would lend one to believe. So I would not, I understand people being discouraged by it. It's been counterintuitive. But the bigger question is why? Why has there been such a massive effort by these massive banks to mess with silver? If you look at that chart that you put up during your interview with Ed Steer, oil is down at the bottom in terms of short. And silver's way up here. It is the largest concentrated short position by a handful, 8 Western banks. Well, I guarantee you those same 8 banks have been doing the same thing in the LBMA, where they have a 300 million ounce float and trade 3 billion ounces a day. 10 times the float, 90+% naked. And that's the answer that I would give, is that it's been manipulated, not for gain. Maybe the bullion banks that mess with it figure, well, we're being told to do this, but we can make some money at the same time. But more so because the military-industrial complex has been running this country as President Biden was sitting on a beach. It wasn't him making the decisions to, Syria or any of the other things that we were doing, and bombing runs here and military there, and all the things that we were doing, he didn't have part of. But the military-industrial complex, I argue, did. And the billions and billions and billions in military aid we gave to the Ukraine. And it's very interesting. If you look at who owns all of the military companies, like Raytheon and General Dynamics and Boeing, and who do you think owns all that? Oh, that's BlackRock. And who do you think got all the contracts to rebuild the Ukraine, where all the money will be made? Well, guess what? That's BlackRock. And who do you think is now the primary custodian of SLV and GLD along with JP Morgan? Oh, that's BlackRock. So it's a whole lot deeper than people think. But these massive behemoth institutions have crossed the line from being a corporate entity into, becoming more government than anything else. In my mind, that's why silver has been held back. But you could argue that there is a realization by countries and very powerful countries that aren't afraid to stand up to the COMEX. They aren't afraid to stand up to the LBMA or to the West for that matter. They understand what we've been doing, and they're beating us at our own game. It will happen. It will happen in a glorious, spectacular fashion. It will test your patience. But when it snaps, it will snap in a way that you finally will understand why you had such strong fingertips, that your intuition led you in the right direction. So I'm very confident of that. There's a 90% correlation through all of history in the movements of gold and silver. They don't move in perfect harmony very often, and we've seen that with gold's run up. But often silver, as we've said before, will catch up and surpass gold before it's all said and done with the percentage gain. So final chapter hasn't been written on silver yet, but I understand it's frustrating, but it isn't a tier one asset backing a new system like gold. And that's the primary reason, I think.
Speaking of silver, I noticed that 3 of our 4 weekly specials this week, before we sign off, want to make people aware of those. If you could run us through the weekly specials, 3 or 4 of which are in silver.
Yeah, again, we have junk silver premiums have risen a little bit at $1.99 over spot. We had it at $1.49 over spot forever. I mean, I kept screaming, cheap. The pre-65 half dollars at $2.25 over. I like the dimes and quarters better myself. The half dollars were the same price, or 10 cents more. Now they're 26 cents more. Rising premiums. Junk silver is always a good proxy for it. In my mind, because it hasn't been made since, for 60 years at the least. Nordic Mint silver 10-ounce bars, $2.20 over spot. Those are bars that we make in-house. They're very nice. And then, of course, backdate Krugerrand 1-ounce, $49 over spot. That's cheaper than a gold bar. That's still a hell of a value. So there's still value to be found. And we do have, by the way, we re-upped from a different source as many numismatic coins as we can buy, but they're nowhere near the value that the other ones were. So the people that still want, we do have some circulated BU and AU $20 Liberties that are from that last batch that are still cheap, like really stupid cheap. But other than that, the numismatic ship from the once in a career value has kind of sailed. There's a few hundred of those BU and AU Liberties left. For those who hear this and want to jump on it, I'm sure you want to do that quickly because, again, you're talking way under the price of a gold eagle. Never seen that before. Just food for thought. But silver is where the real value is. And I think from a standpoint of potential, junk silver is the place to be. It's the most undervalued silver asset or silver product that for 3 years was right on the heels of Silver Eagle's double-digit premium. So I would look at those myself.
Thank you, Andy, for joining us again. I know we had to make a special arrangements this week because you're going to be booked during our normal slot. We hope to have
I will be back next week.
Live for our 8 p.m. Eastern live stream. And folks, look to see all of you there. Make sure you share this widely. And Andy, thank you for joining us again on Liberty.
And again, I need a friend. Don't go. No, I always enjoy our conversations, Don. Again, it's cathartic to be able to get this stuff off my chest. So thanks for having me, and look forward to seeing you next week. Thanks for pivoting with me this week, and I hope everyone has a good weekend, and we'll see you next week.
And God bless everyone in the beginning of Lent here who are celebrating Ash Wednesday tomorrow. That'll be, by the time you see this, it will be Ash Wednesday. So, Andy, thanks again.
Got it.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials while supplies last. Pre-1965 mixed junk silver is just $1.99 over spot per ounce, and pre-65 half dollars are just $2.25 over spot per ounce. Backdated 1-ounce gold South African Krugerrand are just $49 over spot per ounce. And 10-ounce silver Nordic Mint bars are just $2.10 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.